Morning everyone, welcome to Ainsley News. It's Friday the 3rd of December. It's not just supply chains and why inflation is at both ends. As we talked about on Wednesday, even Fed Chair Jerome Transitory Powell is conceding this inflationary setup is anything but transitory. The problem is that they're just still citing supply chain issues as the key driver, but the evidence on the demand side is just as compelling. Global Macro Monitor had this to say. Fed Chair Jerome Powell finally admitted yesterday, at least implicitly, there is too much stimulus demand in the macro context in the global economy, and the Fed will have to accelerate its tapering. I'm going to show you some charts today. Click through to ainsleyBullion.com.au to see these. These charts clearly illustrate the US economy is overheating and is a major contributing factor to inflation. Nominal retail sales and core capital goods shipments remain 15% above and years ahead of their pre-COVID trend. Add to these the well-documented supply chain issues, and you can quickly see why Powell did such a backflip this week. In that same article we talked about this week, we presented Global Macro's insiders Julian Brigden's view on where this goes. In coming to his conclusions, Brigden also presented the same setup of inflationary pressures well beyond the supply side. Policymakers' inflation credibility is wearing thin. In March, Joe Powell said, "You'll see firm reluctance to raise prices." He's been dead wrong. The Beige Book recently reported several districts indicated that businesses anticipate significant hikes in their selling prices in the months ahead. That from him. If the spread between PPI and core PCE reverts to normal levels, core is going to get a lot higher before this is over. Jerome Powell also blamed a narrow group of foods and services for the spike of inflation. Yet, when we look at the narrow metrics of inflation, which are beloved by the doves, they simply lag the NY or New York Fed's underlying inflation gauge, or the UIG. UIG is specifically designed to measure a broad set of prices, and it's currently at 25-year highs. On balance, when one looks at all of this, the policy mistake many analysts feared for some months now looks almost certain. Too little, too late. Whilst the Fed have flagged they may expedite the taper of QE in the next meeting, they are silent on raising rates. And it's not just a United States thing. The same policy mistake fears are playing out for our own Reserve Bank of Australia. As of yesterday, we now have all four major banks ignoring the RBA's 0.1% cash rate, and you can no longer get a sub 2% loan. This from the ABC. NAB on Thursday closed the door on major banks offering sub 2% mortgages through their main brands. It raised its fixed rates for the third time in less than 6 weeks, with some mortgages going up by 0.5% of a percentage point. That saw NAB's cheapest one-year fixed mortgage rise from 1.99% to 2.49%. The one-year fixed rate was playing some catch-up to longer-term fixed mortgages, which NAB had already increased twice over recent weeks. The move leaves the lowest 1- and 2-year big bank fixed mortgage rates at 2.24%. Rate City, Sally Tyndall, said the major banks had succumbed to funding pressures as market interest rates rose sharply globally over recent months, and she said she did not expect that trend to stop. In other words, even if the central bank keep it too easy too long, the bond market will decide, and then history's largest global debt pile is staring down the barrel of rising interest rates. Climb as they may, they will remain negative in real terms after subtracting this high inflation. It's hard to imagine a more perfect macro environment for gold. And of course, silver. And that's news for today, everyone. Hope you've enjoyed this full week of news, actually. Interested in gold, silver, or platinum, and also checking out the charts for today's news, jump over to ainsleyBullion.com.au. Chasing crypto, ainsleywealth.com.au, and goldsilverstandard.com for our own crypto built and backed by real gold and silver. We'll catch you on Monday for more news.